Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. Today is Wednesday. It'll be day one for me in step two. I've been taking some time off and I'm getting ready to get back to it. Day one being on inventory day, and I thought I would just document what's going on. I don't know if I would be showing all the live trades because they get kind of come back, and we'll talk about it after the fact when I'm done on the trading day. One thing I want to mention about the inventory report is when I was looking over my documentation, or actually, looking over what kind of things happened in the overnight and whatnot. One of the things I saw that came out that it was already in CNBC was it had already reported on the American stockpile of crude oil inventories. I don't know if we can find it or not. Let me pause here. We're a couple minutes prior to the inventory. So here's what I saw when I was going through my stuff here. I want to keep this kind of small because I want to see. Oh, I need to update my spreadsheet to 2/3, which would be 11 today. And 3P target, 6P target is 120. So we're setting up for a 6P target like I like to set up for, and 2/3 stop. That's where we are right now. The ADR is at 1.63. Just pull this over real quick. So 1.63, 1R stop is about 16, 17 ticks. 1P target 20, 40, you can see 60, 80, whatever. Rounding up to the nearest tick in this case. This was the open, 41.56. I didn't put any of the volume numbers in because basically they're irrelevant on inventory day. You're looking at what's the inventory number. Here you are right now, 42.55, 40.55. If we put in the low, 41.57, and we look how far have we been up, the 43.52, 43.96 is a 12p move. We have been to here so far, between 9 and 10. And then if we look at the low, I mean the high into the low, we're right off the low, right off the high. So it's not, we haven't even, I think we've made a 1p move down off the high. You can see the high sitting right there at 43.52. Now remember that you can't trade. Now in step one you can trade whenever you want, but step two you have to wait for the 1 minute to pass by between 9:30 to 9:31 off the inventory report, so you can't come in. You can see all the interest here, red interest at 9 o'clock, and if we look back at 8, you had a little bit of blue interest at 8, and you see us hanging out at the R2 line roughly for the morning trading in front of the inventory number. So we're a minute outside. One of the things that I wanted to kind of comment on while we're waiting, let me just minimize this so we can see when the number comes out, is oil prices at 5-month high on big drop in U.S. crude stocks. So this, how is this known right now previous to the inventory report? So this was published, actually if you look at the published date, it was published on the 4th, which was Tuesday at 10 p.m., updated 3 hours ago. But it was published, so they knew this number was actually known. And this might be one of the reasons that, I mean, I got to do a lot more research into it. I'm not the most a fundamental person in the world. I'm a technical trader that doesn't try to ignore the fundamentals. But knowing that this is out the night before, no wonder the crude oil inventory, the inventory report is kind of a non-event now. Because if this is true, if this number is known the night before, they're just ignoring all the inventory report itself. Then this might be half the reason why the inventory report isn't like a red report anymore, because we see that it's already known. I mean, we know what the American We're sitting here at the 5-month high. Oil prices at 5-month high on a big drop in U.S. crude stocks. So the inventory number, in other words, right? So, well, and you see it's being affected now. Look, where this used to be high numbers usually, now it's not nothing here. Last few times I've been watching the inventories, I mean, I'm wondering what happened in the time that I was off that the inventory isn't effectively a good number anymore. Why is it not a red report every time? Well, maybe it's because what I just figured out, because the CNBC said so, as I do my morning, we see the negative 7.4, they reported 5.8, and you see a negative 7.4 number. It is what it is, right? It's Trump was on record as saying, "Boy, what a horrific interview he had just recently, right, with Axios." You know, in my humble opinion, there's only one way to trade this, and that's down. Since we're already at the highs, that the market has already run its course over the last couple of days up. So there's a lot of room for a retracement right now, right? At least $1, you would think, just looking at the last 2 days going up into today, being third day. Possibility to run back into the R1 line. 50% brings it back into this demand area right in here, which is about what, 4184, and you got 4224. And see what we got going on here. Honestly, I wouldn't mind getting involved here pretty soon. Now this is the fourth time it looks like it's trying to go up here, right? 1, 2, 3, 4 to break through. See how hard it breaks through the 52 line, maybe. All right, when I see something to trade, I will unpause. For now, we're just stand aside here for a little bit, see if we run the highs. All right, so if it does fall, where do we want to be in the short? Probably right here at the gold line, maybe. It looks like 4333. So we'll put it at 4332 if it comes down. I'll unpause if that gets hit. So let's look at the 10-minute chart. Look at this. Look at this. 15-minute, 10-minute. I mean, we're dealing with a run that's moved it up through to the 43 line, right? Here we go. We're making an attempt for the high right now. Remove. Wouldn't mind taking a stab right here at the high. Got in a little bit too early. I mean, I exited too early. Damn it. Oh, I hate when I do that. Gets dangerous down in here, though. I should have held up there. Shit. Pause. Not doing anything stupid here. Okay, so let's look at this another way here. We see our highest volumes coming through here. Off this run here, we have this here. Then I got in. Then we see a couple red bars coming through. Most likely it means that it will go retest the high. These two offset each other, and this one being more red. I don't know. Oh, so close. I got to stop doing what I do. It's holding my ground when I find a good entry point. Damn it. Look at that. That's already made a 50-40 tick move down. Here's your 5 on the charts right now on the red side. Look at that sucker coming down hard. There's 1,000 right there with the red bar. Easy money made right here. Not a huge fan of being long, as we well know. I will never risk a lot on the long trade. Either it's got to go or it doesn't, in my humble opinion on longs. Damn it. I should have held that one. All right. Well, shit. You hope that you learn from your mistakes. I've done this so many times now. I get in a good trade setup, and I just get too close to it, and it's a difficult situation. But you try not to you try not to compound your mistake by trying to chase it. A 1, 2, 3 setup. This is right now is the 3-point coming down. But if you're looking at volume, it's actually flipped. offsetting volume right there, blues. So you're expecting the market to sell off to some degree. And this might be all she wrote to the sell-off. I don't mind, well, you know, I should say I do mind. I had to be willing to risk down to here. So there's your test, and then here, and then a re-entry point. One thing I have noticed about longs over trading, this happens an awful lot. If it makes a move up, you'll see the volume number, you'll see the initial move, the test move. You see it reset here. It might come down a little bit lower, but not much lower, or right on top of the number, and then go. So that's a typical long move that you'll see in the charts. It's one of those things that you just pick up eventually by watching the market. And then we saw that we had a 52 and we had a high come up here, and then it pushed off of it based on this volume bar kicking in right there, which I did correct there, and then I just got too close to it. I should have held out, and obviously I would be getting out of my short trade around roughly about 43.17 or so. So that trade would have been over now on the one contract side. What did I end up getting out of it? 3 ticks so far, and I'm trying to keep myself to 3 trades. 3 trades per day, and that's it. So the question I have to ask myself, do I want to continue to trade into this gunk, or do I want to wait for 230 mark, and maybe we have a sell-off into the last half hour of trading? Open outcry, 1:30 Central Time. Now I do have my rule with 3+1. I used to just call it 5+1, but I'm trying to hold to 3 and then 3+1. So then I have to have a real good reason to have that +1. I've noticed that when I get to 5 trades, I seem to give back more than I'm willing to give. I've been toying with the market now since I've been in step 2 with a few resets for a while now. Then I've just kind of basically took the month of July off for a degree, and then I reset my account just recently on this is where I stand today. So day 1. So I've had some people ask me, you know, hey, how are you doing? So this is FTP day 1, or step 2 day 1, and the goal is obviously in the month of August is to get through step 2, not do anything stupid at this point, and just get myself to the next level. Last couple of times in step 2, I've made it to 31,000. I've allowed myself to hit that reset button, right? I got a free reset every month, and I've been utilizing that because I've been trying to figure out exactly how I want to attack the long side of the market. Those that know that my weakness is trading on the long side, and when to come in long, when not to come in long, when is a long day, when is not a long day. All those questions have been my things that's been plaguing me, and I honestly, I've made it through 11, 12 trading days about 3 times now, and then I get bored with myself, and I don't think it has anything to do with my trading, as opposed to the old rules at Top Step used to be you had to clear something in 10 days, and I'm still in that mind frame that I need to be passing something in 10 trading days, and I've got to get myself out of that mindset, right? That I can do it in as many days as it takes now to get to the next level. I've got to, I mean, because like at 10 trading days, I was sitting at 30,900 last time. A couple times before, I was at like 30,700, and then I'd have, I hit max daily loss because frankly, I'm frustrated that I'm not higher in my account after 10 trading days. I was still up $900. At the high peak mark, I was at 31,000 roughly and something. So I was up $1,000 after 12 trading days, just hem hawing my way through. But still, it's like I'm not making enough money. I'm not doing and I'm not doing as good as I should be doing. I'm still critiquing myself, even though I'm doing well. So, and then I get frustrated after even having all these positive trading days. I still get frustrated with myself not doing better than where I should be. And maybe it's just it's a wrong mindset. It's just a mindset that's false. It's a mindset that I have to get over because of prior trading rules, where I knew that I needed 10 days. I needed to make a decision at 9 trading days where I wanted to keep the account or not keep the account. So grabbing $900 and saying, all right, I'm done with this at 10 trading days. Just give me my money. I'm not far enough away from zero to hold it. There's all kinds of things that are going in my head because unfortunately I've been around the block one too many times, I believe, in my humble opinion. So when I'm upset with myself, but I'm not mad at myself. I should have held this one over the high. What I should have done, woulda, shoulda, coulda, in my woulda, shoulda, coulda world, I should have held that 5 ticks over that high right there and forced it to make a new high when I came in right up there against this line here. That's what I should have done. And then I would have been exiting off of this right here, getting out. So it was about a 20 tick move that I allowed the market to. I should be up roughly about 20 ticks or so. Um, was that 20 to 50? Yeah, maybe 25 ticks. I should be up around 25 ticks after today right now. So those are the kind of things that I've got to. I've really struggled with a market that moves against me. Um, Over the years. I don't like taking losses, and especially I hate taking losses on the long side because they just move too quick against me. And here, see what I've noticed is a true long move. Here's your setup right there. Maybe I lay off of it on the initial push, and then I get involved in it on this push right through here. Because you're kind of flying blind when you're jumping in the market. Although the market has been up, you're just looking at, okay, here's a down move here. The market has already been up through this level, and it's just basically hit support line, and then now it's making a move back on an up day. So now you're in the danger area right now. Unless you have a high volume spike at this point, you really have no business being on a short side trade. You might see a move between 2 and 2:30. Excuse me, 1 and 1:30 Central Time. I always think of my time zone. All right, so that's enough observation for now. I'm going to pause here. If I see anything I really want to do, I'll come back. Otherwise, what we've done right now is we've just basically, look, we just hit into it. We're not done. We haven't done anything, honestly. We've pretty much went right back into the trading range that's already been established. And you can see our price features are showing, the MACD is showing higher high, right? And so is this. So I don't want to catch it here. I want to wait for it to form a little bit better maybe. So here's something to note quickly, the way I look at things, is I like to take the 3 highest volume bars in a movement, and then what's the sum difference. And this is minus 761, so it favors the long over the short when you're just looking at volume reds versus blues. And you see this being reflected in price movement right now. That the long move versus the short, the short move, on the long move. That doesn't mean it's 100% because nothing in trading is 100%. But if you can find some edge, 100%, there's nothing that's 100%. But if you can find an edge that works for you, like for instance, what I call the 5, and if I would have waited for it, I could have taken this move and maybe I'm getting out now at this level here. But there was a trade, if I missed that short trade, there was a trade here hitting that long, which might have been the true movement anyway, knowing that the market has been up pretty much since Monday. Is 43.52 as high as the market's going to go up right now? I don't know. I can tell you that as far as blow-off volume goes, you haven't seen extreme volatility or volume hit up here. It doesn't mean that it's not a supply zone and the market sells off for a while, but usually what you see is high volume spikes and some stop running when a top is hit. A big top, I should say. In my humble opinion, what's going to happen is we're going to run back up between here and at the 1 o'clock mark Central Standard Time. We're going to toy around at this levels for a while. Now, you just don't know. I mean, would someone come in and sell off the market right now? That's obviously a play that can happen. You know, they can find some, like I know that I think when it does go down, you know, there's a dollar move available, at least a dollar move available. And you see that being reflected in my profit targets today, thinking that when we do go down, there's a $1.20 available here to $1.20 available if it does go down. So that's why you see me with that high profit target today. All right, there's some food for thought for you. All right, so let's just wrap this video up. I took a third trade and only got a tick. I tried to long in here. You know, it's one of those days I'm right and wrong all at the same time. So if and buts were candy and nuts and all that happy horse shit, here's the short entry that I had on right here at 43.49. And then it came back when I should have held on. This move up only went to 43.42. This move went to 43.36. And then you see the drop. Now a 6p target coming down, if I just would have sold and hold, was 42, excuse me, it was, let me plug that number in correctly. Make sure that I got this. 42.32. Which ran right about here, and it went through it right there. So that was 120 tick, 119 tick move. But you would have to hold it. It's not usually the way I trade. So the only way that I would have been able to hold this particular trade would have been with the trailer or the tortoise side of the trade. In other words, I'd have to have that second contract on. our second series of contracts that would go after the tortoise side of the trade, which would be down here. So possible target and profit today, let's say 25 and 120, maybe 30 with 120. It's about 150 on 2. It's really difficult to trade 2 contracts at Top Step Trader unless you just do one and forget about it. Taking 2 hit right off the bat at 11 ticks will put you down minus 22. So you're already at half of your loss pretty much on one trade. That's the dilemma of the small account, is when to come in and when to basically add that second contract. It's always been the nemesis of me, because it always works in hindsight, right? Whenever you look at a market, you think, wow, the woulda, shoulda, coulda side of the trade, I could have made 150 ticks. In other words, $1,500 trading 2. But how do you hold it? Obviously I would have taken off the rabbit side of the trade right in here. There's no doubt in my mind that I would have taken out the rabbit side of the trade, because at this point in time, there's no indication that it would have stopped. Now you could have held the good thing about that second contract when you do win it. Let's say this was a 30 tick winner, you could have held your second contract above the high here. I wouldn't recommend that, but you could physically hold it above the high, say 10 ticks above, and still win the day. Maybe it's 15, maybe it's 20 ticks, but you still win the day. That's the advantage of that second contract when it moves with you. Obviously, what you need to do is take away more on that win side of the trade than you're willing to lose overall. So the overall loss here was like 22, and we pulled out 25. So you cover your loss side of the trade on your 2 contract movement. That is probably the best way, if you have an edge, to be able to take on a trade itself, in my humble opinion. The move's already happened. I'm going to stop the video here. I'm at 3. I kind of told myself, not kind of, the overall writing rule right now is 3 trades and out. Keep my losses small. Try to do my best to hold the winner a little bit better. And move on to step 2 into the pro funded account. Make this a marathon, not a sprint. Don't worry about the 10 days. I mean, over and over, on 3 separate occasions, I've traded past the 10 trading days. And if I would have just kept, allow myself a little bit of a loss and just keep on moving on, I would have passed step 2 over time. I'd had some losing days. I've got to get comfortable with losing about 30, 35 ticks tops on a losing day. I've got to be comfortable with getting out of the market and not running that, that extra 15 ticks going. Once I get a certain trade set in my head, I just do the WTF and I move forward, and I say I already have a reset. I make excuses about why I do what I do. So if I would just allow the bad days, there's going to be days, like all of us, we know we have bad trading days. You just not on your game every day of the week. I know that I'll win 8 in a 10 trading day period of time. I'll win about 6 to 8 of those days. So there's going to be somewhere between 2 to 4 days that I'm going to lose on any given 10 trading days. So knowing that going in, I've got to just allow the odds to continue to work in my favor. I'm not going to worry about the 2 to 230 today. I'd like to trade the close 30, but I'm at 3 trades. I really still think that we're going to, this right here, by the way, why did I like the long setup towards the end? We have R1 and our Fibonacci number coinciding at the same time. Now it's off the table. It usually hits it and bounces and goes. It's hit it now, so now the target's probably around 50% mark now. will the market run to 50% or not? So yeah, I'd rather hold this one and then try to re-enter a trade here. This is a lot more riskier than up here up against what I perceive to be the high at that point in time. You just get comfortable with seeing what you see every so often, and you know, going up against a mark that's a first time through. You know, once it gets back up there, there's a reason why it sold off here, and obviously it sold off again because there's supply up here. That's why the first time that you approach a target that's been hit could be most likely the best time to run it. As it approaches it the third time, and then especially when it approaches it the fourth time, you really don't want to take. So if it would come back to 43.52 again, that'd be 3 points of contact, for instance. But the fourth time it would come up to 43.52, you really don't want to take that trade. That's the fourth time that usually what you'll see is you'll see a breakout that'll go the other way. So in other words, let me blow this up here and move this over. A little bit of help here for you. So this was the first. Here's your second. Let's say it'd come back up here for the third. That's your 3 points of contact. It could come down. Usually, let's say this one comes down here. It might come half the move of this move here, and then come back up for the fourth time. And that fourth time, so 1, 2, 3. This is the danger zone. You don't want to be shorting that fourth time at a point. Third gets dangerous, but 3 points of contact, you wait for it to hit it or close to it, and then you trade it off. So it could look like this, sloping down like that. Let me remove this. So your short side trade setup could look something like this, 3 points of contact like that, and then selling off again. But when it comes back to that fourth time, you want to be very careful, because that's usually the time the market decides to hammer you. They've eat up the supply, and then they send it up through that supply area, and they make a new high usually. Something to remember. Hopefully food for thought for you. All right, I'm going to wrap this video up right here. It's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. Today was day one. I'm positive. Not really happy with it, but I'm not down. So we'll look for better trade setups. Hopefully I can do a better job of holding my trade setups into the future. Bye for now. Day one after having some time off. So I'm okay with it. I'm okay with it. We'll make tomorrow, we'll look for a better setup. Today was a really good setup though. That was a nice 30 tick winner here. Nice setup, and a really nice setup for the tortoise side on that second contract. Beautiful setup. All right, Dave Knight out. Bye for now.